Good afternoon, everybody. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted today to be joined by Anoop Singh, who is Global Head of Shipping Research at Oil Brokerage Limited, based in Singapore. Anoop, thanks so much for joining us today on Halftime Talk.
Hi, Dayala. Very happy to be here. Thank you.
Great to have you. Let's start by asking you about security around shipping these days. Obviously, continue to see, heightened geopolitical tensions everywhere, particularly in choke points such as the Strait of Hormuz and Bab el-Mandab, etc. And yet we haven't seen we've seen a redirection of flows, but not a lot of disruption, outright disruption. Do you think that'll remain to be the case now? These new trade flow patterns we've seen emerge in the last year or two specifically. Are we now set into a new pattern? And how is the shipping sector coping with that?
We are settled into sort of an uneasy truce, and a lot of that will adapt and change depending on how the situation evolves essentially now between Trump and Netanyahu, and on one side and Iran on the other side, right? So yes, you're right in the sense that for the last many weeks we haven't seen a major event in the waterways, but the disruption that has been now in place for more than a year remains in play, right? So, for instance, there were about 65 ships which would transit the Bab el Mandeb on a weekly basis, and now
Okay.
that's come down to about 20, 25 ships, and the flow which has
Since,
sustained basically
sorry,
is,
but
is
since
Russia bound.
when?
Yeah.
So the 65 was when?
That was
Approx.
before. Yeah, that was before the things blew up in that part of the world. Right? So
Okay.
all the way
More
through
than
the end
two
of
years ago.
2023, yeah.
Okay.
So that was the level of flow. So we are still at a very small flow relative to where it used to be in the past. And uh, just as the year started to dawn and there was a truce, there was a small improvement in traffic. So from about 3 to 4 ships a week, we were looking at 7, 8 ships a week, but we did not hit the routine levels, which are 60, 65 ships a week. So it remains a disruption, and it's been uh, pretty positive for tanker rates, obviously
Mm-hmm.
because you
Mm-hmm.
have ships routing around the Cape. But this has been one of those disruptions that has been partially solved by supply chains on the upstream side, on the oil side, adapting. So, things like
Yeah.
diesel flows uh, around the Cape have actually not grown as much because Europe's diesel appetite is being satisfied much more now by partly its own refineries running harder and partly by the US refineries channeling flow into Europe, right? So some of the sting has gone out in the freight market because of supply chain adaptations, right? But we are just one step away, I
Mm.
guess, from the next hard to solve problem, which will again, push more traffic around the Cape, either eastbound or westbound, depending on where the disruption happens. And again, we could see a big flare up in freight rates. Right. So
Yeah.
one of those potential sort of hard to solve problems appears to be building in the U.S. China tariff war, so to
Mm.
speak.
Mm.
Yeah,
Yeah,
because
absolutely. Well,
yeah,
that's certainly good.
China has now said a hard no to U.S. energy, right? Which means that in a part of the energy complex, which is basically the petrochemical complex, some of the feedstock that were coming from the US, which is basically LPG and ethane, will now have to be replaced buy other feedstocks like naphtha, and then that means we will now potentially, if demand for petrochemical feedstock or products does hold up in China, then we'll again see a large flow of potentially naphtha, which will again have to direct around the Cape. Right, so that's another sort of big increase in tanker demand, which could happen as geopolitics evolves.
Absolutely, yeah. And that we had somebody last week mentioning, talking about that naphtha, but also in the context of the fact that even petchem demand
Mm.
in China this year at the moment, there it could be a bit lower than even originally expected. Yeah, that's great, Anoop. I mean, what about what the other development we've seen recently is the Russian crude flows. Let's see what's happening with those. They've obviously been
Mm.
redirected to an extent into India, to China to an extent as well. The fact that oil prices have dropped in the last few weeks has also impacted Russian Urals crude, for example, and that is impacting tanker demand, isn't it? Is it having an impact on the market immediately or no?
Yes, yes, it has.
Mm,
So combination of two things are coming through. One was a bit of a bye-bye gift or by the Biden administration when they sanctioned about 180 tankers, right? So all those
mm,
tankers which were earlier carrying Russian oil are by and large benched. So they're either doing floating storage or idling. They're not particularly employable. At the same time, the demand for Russian energy is now again sort of rising because many more ships can now participate in that trade. So whatever cap was there in terms of available supply capacity, fleet capacity, that's gone
mm.
because now you can have many more ships trading that cargo. So yeah, so we are seeing freight rates respond to that on a combination of you know, more flow and close to 180 tankers, which were earlier in the Russian business, which are no longer, in that trade at all, right?
Yeah, and how much is I mean, in the context of sanctions and the OPEC stricter sort of measures that were taken at the beginning of the year, I mean, I know this isn't specifically, specifically shipping, but the insurance market that is related and linked into that, has that settled down also in terms of, obviously there's certain ships that were sanctioned that aren't part of the whole sort of international insurance scheme. But again, we saw similar adjustments there, didn't we, over the last year or two? Has that also settled into a new normal?
Yes. So the insurance, which is basically the third party liability insurance, what we
Yeah.
call P&I insurance, protection and indemnity insurance, which covers third party claims. So that was is still heavily concentrated in the hands of a few insurers, 12, 13 insurers, all of who are Western based. But the Russian trade has found alternates through Russian providers of insurance, and eventually,
And payment schemes similarly as well, right? I mean, all the payment mechanisms have,
yeah,
whether it's India or China taking Russian
yeah,
oil,
yeah,
plenty of sort of novelty and innovation around that.
yes, yes. So the insurance is not a big showstopper anymore. Although, again, Biden's administration, as they were leaving, did sanction.
Hmm.
I think there were two
They did.
Russian insurance companies, right? But it's a question of novating to a new name or things like that. So that's not been a showstopper. Yeah.
Okay, let's talk a bit about Anoop, sort of more of a medium-term influence and impact on the industry, which is regulatory provisions around cleaner fuels, new fuels for the shipping sector, IMO, etc. When IMO 2020 came out, which was now 5 years ago, there was
Mm.
a lot of nervousness ahead of that, but it all seemed to go very smoothly. But still, a lot of comments from shippers and from ports about sort of the unpredictability of the regulation to come and how they can plan for that. And obviously, from a business point of view, the more predictable things are, the better they can plan. So again, I mean, our environmental regulatory expectations secure, or does the shipping sector still find itself unable to really plan too far forward?
Uh, it's a good question in the sense that some of the uh, some of the regulatory changes that are coming through right now are going to be disruptive in the sense that they will ask shipping to do things for which uh, neither is shipping entirely ready as yet, and nor is the alternate fuel available in the abundance which some of the regulators seem to think it is going to be, right? Uh, we are just coming on, we just in the first year of an implementation of a like similar regulation
Mm,
from the EU, right? It was called the Fuel
yeah.
EU Maritime, and uh, and basically ships going into Europe were required to have X%, I think 2% of their emissions come from low carbon fuels. Yeah, the default uh, sort of compliance criteria by a majority of the ships which are calling into EU is not so much to use biofuels, but to pay a
Mm,
penalty, to pay a fine.
right.
Yeah.
So that's still the
Uh,
option.
so yeah, so that which was permitted in the rules as an option, which also this is a question on whether these rules are they over ambitious and they haven't catered into the planning phase, whether there is the low carbon molecule available in abundance. And I don't think it's about the price. It's not as if you can pay 10x more and you get the molecule. You just don't
Mm,
have the molecule available. So that situation, already the industry is facing. Now we're going to go into 2028 when the IMO wants to make a similar rule global, right? And it's a rule which has been announced with a lot of fanfare, but not yet implemented. It's going to go through what could be a potential just be a tick box exercise through October, or it could be some modification, some morphing. So we are holding comment till we are, till really see what really is going to be the final shape of that regulation, right?
okay.
But you know, it's a lot of these things are interrelated. Yeah, so Fuel EU Maritime or IMO's carbon regulation and the whole decarbonization journey around shipping is interrelated with geopolitics. What do
Of
I mean by
course.
that? Yeah, is uh, on the one hand, uh, you know, the Trump administration has decided that they will not support the IMO's attempt to decarbonize, and they've been quite vocal about it, right? Uh, that's one aspect. The other aspect is that the U.S. is now taking a hatchet to Chinese shipyards and Chinese built vessels,
Mm,
right? Which means now 70% of the tanker new builds which are being built right now are being built at Chinese shipyards. Now, if many of those ships are difficult to trade into the U.S. because of the USTR regulations, then it puts a thought in the mind of prospective owners that should they go build in China at all in the first place, right? Uh, but that was a chicken and egg situation because at the other end, you do not have enough surplus capacity to build anywhere outside China. Yeah. And to top it up, the tanker fleet is the oldest it has been since about 2001. So 23, 24 years ago was when the tanker fleet was this old. So it's a very old fleet,
mm.
uh, which needs a lot of renewal. We need to
Are
supplement
lots
it.
of those are a lot of those old vessels being used in the dark and shadow fleet? A lot of those talk about a lot of that being
Yeah,
siphoned off to that.
yeah, indeed, indeed. Yeah, they are being used there. Yeah. But even outside of that, the average trading age of a ship, even outside the shadow fleet, has gone up. So people are accepting, or rather being forced to accept older vessels, which are in some cases can be quite problematic. Yeah. So there are many things which are sort of interrelated you know, in the decarbonization journey.
Mm.
Yeah, you need to at least have the sufficient yard capacity to build more modern ships. Right? At the end of the day, there's almost a 20-30% difference in the consumption of a new vessel versus an old vessel, right? So if you're a new vessel, then you will be subject to fewer or lower costs just because you're consuming less fuel.
Of course. What about, I mean, and in terms of the even newer or older vessels, or the ones that are sort of in between, if from an efficiency, you're mentioning their efficiencies really and costs. How much is new, innovative sort of digitization or AI playing a part in shipping operating
Mm,
efficiencies? Do you see that progressing as fast as the technology itself is in general,
mm,
or is shipping an old sector that likes to continue to use to use its
mm.
ways as it always has?
Uh, I think there are what I'm positively surprised about with is the level of interest amongst the bright and the smart people to solve for some of the shipping problems. So there's a lot of enthusiasm because shipping actually falls under this broad supply chain and operational research sort of ambit, which generally is a good place for machine learning to come in and solve problems or AI to come and
Yeah.
solve problems. So there is interest, right? So we discuss with people who are incredibly intelligent coming to solve shipping problems. The challenge is coming that the problems that money wants to solve is to generate you know bigger profits through more optimized trading, right? But that is a small market, right?
Mm.
The whole ship trading, the FFA business, and those it's a small market. Uh, with the bigger market is, the bigger problem to solve is how do from a ship owner, right? How do I trade my ship with the least amount of idle time and the most profitability? So that is the big supply chain optimization, ship operation optimization space where there is from where I sit, I see less effort and less work going on. It's a meaty problem. It's
Mm.
not going to make it's not going to it's not as sexy. It's not as it's not in the front and center if in your mind if you're a trader who's hiring a ship to move commodity A from commodity B and who's trading the freight market. It's but it's a bigger problem to solve, and in the grand scheme of things, it is the more useful problem to solve because then you can get more done with the same number of ships, right? So that goes in the same direction of trying to lower your carbon
Yeah.
footprint, of trying to decarbonize, and so on and so forth.
What about, I mean, the other trend that we're seeing, like in any industry, is some smaller players are wheeled out, private equity, and funds are, taking ownership of, for example, more ships. Now that might be a good thing in terms of consolidation, but I mean, what does that mean, do you think, again, for sort of market transparency, freight rate volatility, etc.? Are we expecting more M&A activity in the sector, and is that a positive or negative thing for predictability and planning?
Uh, I think conditions are right for more M&A to take place in some ways. Yeah, it's been a good 2 or 3 years of very strong freight rates, right? So the ship owners, big and small, have got their pockets full. Uh, Usually, when you have pockets full, these entities or these individuals go and buy more ships, but that route is closed now because shipyards are full and new ships are very expensive.
Mhm.
So you've got rich ship owners who could potentially be looking to acquire, spend their capital, spend those profits on acquisitions. So in some ways, the conditions are right, but in other ways, they are not so. Uh, Partly because all this discussion around there being a potential truce between Russia and Ukraine, which has been and the Red Sea, all of which have been major geopolitical drivers for freight rates for keeping them high. There's been an uncertainty introduced around whether the longevity of those, right? So the share prices for the listed companies has come off quite a bit, yeah, over the last 2 3 months. So yes, they're rich, but there's going to be they don't have that much firepower to do share deals, right? Based on shares rather than based on cash. So do I anticipate, in my industry, which is the tanker industry, that we're going to see a huge wave of consolidation? Uh, not so much, not
Not
so
so
much as
much.
yet, yeah. But also, we also got to bear in mind that uh, shipping is quintessentially an industry for risk takers. And so it's made on the legends of people coming in, buying one old ships, and in some cases, like MSC, becoming the largest container ship operator in the world, owner in the world, right?
Yeah.
So it's built on those legends, right? And so there will always be people who will come in and come in with their one ship fleet or two ship fleet and hope to make it big.
Yeah.
So it's an industry. It's a very adventure seeking, adventurous industry.
Yeah, absolutely. I mean, your specialty is tankers, but I just wanted to get your opinion, Anoop,
Yeah.
as we close up on, obviously that you mentioned at the top of the interview the tariffs and the tariff war, Trump. It depends what in terms of geopolitically, what impact it might have on shipping, depending on Trump's attitude and Israel's attitude and Putin's attitude. But just in terms of this, tariff slowdown for GDP and global growth that is being forecast at the end of the
Yeah.
day, at least as long as this uncertainty exists. The dry bulk or container market, I mean, obviously you've got the China US market. That's been quite slow anyway for a while because of the
Mm.
Chinese economy slowdown. But
Yeah.
again, going forward, do you see dramatic shifts there as a result of, these new alliances that we might see
Mm.
being built in trade?
That's it's a big what's it? It's the animal in the room, right? Which is certainly most of the industry is seized with how that's going to go. In the short term, oil demand and tanker demand and tanker shipping oil demand for oil and demand for shipping oil can diverge, right? And
Yeah.
we've seen that play out during COVID. You saw that, right? Shipping demand rocketed because of the need to hold ships oil on the water, right? Uh, but so a lot will depend on how long this tariff standoff or this tariff war will go on for, right? Uh, in the short end, yeah, from if you look at it from an oil analyst's hat, yeah, you do see the oil demand being marked down and being marked down in US and China, and both of them are very important to the flow of shipping and to flow of tanker shipping, both, right? Now, but
Yep.
it's not a given that because there's a projection for oil demand slowdown that we will necessarily see you know an actual fall in Chinese oil demand, because if the way I'm starting to look at it is, why has China taken on such an aggressive stand? Obviously, one is because they think they can win in the war, but also it puts a little bit of a pressure on China to not fail, right? So, which means they not fail. That means they can't let their economy slow down. They can't let their people suffer. Trump has prepared the American population for a period of hardship. The Chinese
No,
government
President
hasn't,
Xi
right?
can't afford that, obviously.
Yeah,
Politically,
you
he
can't
can't
afford
afford
that.
that. Mm.
I don't think it is a given yet that we will see that
Mm.
that the Chinese administration will not pull out some serious measures to support the economic activity. And in times of stress like this, that could be sort of old economy focused, yeah, and therefore could paradoxically be supportive for oil demand, could
Mm.
be
Mm.
supportive for oil trade, could be supportive for oil imports. We are actually a little bit more concerned on the U.S. side of things, because U.S. is an important market for tankers. much more so from their crude export program, and with
Hmm.
oil prices looking like sort of hovering in the mid 60s, that does raise a question on how long for can we anticipate U.S. shale production to grow or to sustain. Yeah. For now, it is. Yeah. With a lot of these things, it's also going to be a question of how long for
Mm.
this uncertainty and the standoff continues.
Anoop Singh, Global Head of Shipping Research at Oil Brokerage Limited. Thanks so much for joining us today on Halftime Talk. It's been great to have your views.
Thank you, Dayala. It was very nice to speak to all of you.